I'm Nick Morgan. I'm a partner with the law firm Paul Hastings in the investigations and white-collar defense group, so you can probably guess what I'm going to talk about. Scott, if you could.
I'm Scott Forston. I'm head of global regulatory compliance at S&P Global. And so I deal with a number of regulators across the world in various jurisdictions. And we're going to have a chat here and talk about, a little bit about our perspective on ICOs and, the space that many of you are very interested in.
So my background, before I entered private practice, I was at the SEC in the enforcement division as a senior trial counsel. And so now I spend the bulk of my time representing people who are being investigated by the SEC or are being sued by the SEC. So as a result of that, I've been drawn into the ICO space 6 months ago. As you probably have read, the SEC is becoming increasingly smart in this area. They're working their way up the learning curve. And I know for a fact that subpoenas are coming out and are out from the enforcement division. So we want to talk a little bit about ways to avoid being the recipient of an SEC subpoena. And Scott, I know from your background in sort of risk assessment, you have a unique view on sort of this marketplace and some of the danger signs or red flags to be aware of.
So, I guess initially, when Nick and I were talking earlier, he was asking how I got into this space. And, for me, it's more of a personal interest, and I've been in banking for over 20 years. And one of the things I was interested in was the payment space. And as blockchain and Bitcoin became bigger, and I was actually looking at different ways to transact or exchange on a global basis. For low transaction costs, and every time I look at various different ways of doing it, there were a number of basically red flags or things that I would see of why this wouldn't work, this model wouldn't work to do this, and a number of them came from my I'm not an attorney, but just from a regulatory background of from a KYC perspective, from an AML perspective, from the various licenses of, whether it's the BIT license in New York or whether it's a money transmitter license in, various states from a U.S. perspective. And so, from that perspective, then I started to look into other jurisdictions outside of the U.S. And as we've seen a number of the ICOs, there is somewhat, I guess, regulatory arbitrage, trying to determine how do I structure this,
Definitely.
Where do I do this? And I would say that's probably a bit, from a red flag perspective, a big one to look at why have they structured it that way and in that jurisdiction.
I've seen that a lot too, where understandably entrepreneurs are not looking to be overregulated. And so this regulatory arbitrage, trying to get out from under the SEC's jurisdiction, there's a lot of effort going into that. And if that means going to Singapore, some people are doing that. Another way I've seen a lot of people try to avoid SEC jurisdiction is to structure their ICO so that it doesn't involve a security. There's been a lot of talk about, when my mother asks me what the Howey test is, I know that this may have jumped the shark, but there's been a lot of talk about how to structure an ICO so that it doesn't involve a security. And I would say if you're spending a lot of your effort sort of bending your ICO into a pretzel to avoid being characterized as a security, you probably ought to spend your time doing something else and maybe not have an ICO. The SEC, even though in the form of the Dow report, has sort of given their first shot across the bow about some of these are going to be securities, most of the attention from the SEC is just going to assume the existence of a security and then go on to some more interesting questions. So I think, I've been approached by many, many people about, is my token going to be a security? How can I structure it not to be a security? I think that's some misplaced effort. I think as much as it pains me to say so, it's going to be far easier if you assume you're dealing with a security and take it from there.
So Nick, would you say there are any businesses or opportunities that lend themselves better to be like structured as an ICO versus not, or what have you seen in your experience?
So I've heard a lot of business models that appear to want to layer on top of their existing business model an ICO funding mechanism. That's fine. It's perfectly okay to raise money that way. I think the better matches that I've seen are where the tokenized blockchain technology actually enhances the business model itself. And there's a lot of talk about utility tokens. The utility token offerings seem to, by and large, lend themselves to that, whereas the token itself is going to be used in some way, in some realistic way, in the business platform. That seems to me a better fit. Nothing wrong with just wanting to use the ICO as a means to raise money, but there are other ways to do that. There are, we structure Reg A plus offerings, private placements all the time that don't require this added layer of complexity. So.
Okay, and then also I guess I wanted to ask a little bit about white papers. I've read a lot of white papers, just from a personal and from an investment perspective of, is this something I would want to participate in or just of interest? And there's a number of them out there that I see are well written. Others, as an educated person, I read it and I don't know what I just read, and it's not clear to me. So, what would you say if somebody's writing a white paper, or if somebody's going to be an investor? What are things to look for that should be included or not included?
So keeping in mind my perspective, which I'm a defense lawyer, so when you get your subpoena from the SEC, I'm going to want to defend you, so I'm going to want you to have thought about that in advance in your white paper. So hopefully this never comes to pass. But the white papers that I've seen, some red flags that I would counsel people giving further thought to, include primarily the use of proceeds. What are you telling investors or donors or whatever you're calling them? What are you telling them you're going to do with their money? And keep in mind that those representations, even though it looks more informal, it's a white paper, it's not a private placement memorandum, those representations, whether it's in the white paper or on your website about how you're going to use money, are what's going to be scrutinized by regulators, by the SEC, by the criminal authorities after the fact if they come looking around. So give that careful thought. I would say that's step one for your white paper. And you look now, and I don't want to pick on anybody in case they're in the room, but for example, if you look at Bancor's white paper, it had representations about how Bancor was going to use the money. At least as of about a week ago, if you look online at that white paper, the use of proceeds section is now gone. I think there's a reason that it's gone, and that's because that's the first stop for regulators when they're analyzing what you've done. Another important aspect of your white papers to keep in mind is, and I've seen sort of characterizations of this all over the place, your advisor board or your advisors. Who are you claiming are your advisors? I've seen one of my partner's pictures appeared as an advisor on an ICO on a web page. I called him and said, "Are you an advisor for these people?" He said, "No, I talked to them once on the phone, and now I'm an advisor on their webpage." If you're claiming that, President Obama is an advisor, to take an extreme example, that's a big claim. You better be able to back it up. So that's going to get scrutinized. Similarly, representations about the ICOs, the principals and their backgrounds and their experience, all of that will be scrubbed with the benefit of hindsight after the fact by regulators. So if I were to pick 3 places to pay particular attention when you're drafting a white paper, it would be use of proceeds, who are your advisors, and what is their actual involvement, and how are you characterizing your qualifications as a principal in the business. So just to turn it back over to you,
Sure,
Scott,
yeah.
I want to give you, you work at S&P. S&P is in the business of assessing risk, rating entities, lots of different kinds of entities, government, publicly traded. Would S&P ever consider rating an ICO? I mean, it seems like this industry sort of calls out for some blessing by some neutral third party that we're more legitimate than the next guy. Is that something that S&P would ever consider doing?
Yeah, I mean that's actually a really interesting proposal from that standpoint. S&P is continually looking at new businesses and how to expand. I guess initially I would think from the ICO perspective, or even like cryptocurrency and blockchain, it would probably fit more into one of the indices. So if there was an S&P cryptocurrency index type of thing, that might be that would go in that direction. That's just. Oh, sorry. Okay, and it's.
We hear ourselves fine, so I don't know what
we can hear it. So yeah, it would probably be from an index perspective, but that's just my thought, not anything that we're necessarily doing. But from a rating perspective, that would be a little bit more challenging because it's the issuer pay model, right? So it's a model that the SEC doesn't like, the government doesn't like, nobody really likes it, but it's the model that works. So from an ICO perspective, it would be those entities paying for a rating, which they could do, but I wouldn't envision that unless it was from a larger entity that was going to go an ICO route.
Well, and presumably if S&P were to come in and a large ICO issuer wanted S&P to evaluate them, give some kind of a rating, there are no doubt some tough due diligence type questions that get asked in order to get that kind of a rating.
Exactly. I mean, that's the type of thing. If you were to look at our criteria and our methodology that we use, it would, most of the time for a startup wouldn't have the infrastructure and things that we're looking at to say, yes, yes, this company is going to be able to, pay the debt or give them a rating that would be a favorable rating.
Well, one of the things we've been seeing spring up is sort of intermediaries in the ICO space who are willing to sort of give their seal of approval. Sandboxes, T0 comes to mind, where they'll say, if you qualify, if you're an ICO issuer and you qualify to play in our space, you will have necessarily met certain of our requirements. And so I think, if it's not S&P giving a rating, I think we'll see we're already beginning to see third-party intermediaries who will help investors differentiate between ICOs and give sort of a good housekeeping stamp of approval that we have vetted these people. We're starting to see that already. So
yeah, I mean, I would agree with that. I would say, so, as you talk about some of those sandboxes, so Singapore, Hong Kong, in Switzerland, there's the foundation model, and then I believe in the UK, there's that sort of sandbox. We haven't seen that here. We have, from the SEC, there's a little bit different perspective of, it's kind of, they don't want to get out in front of everything and actually give that seal of approval, but that is why, one of the reasons why some of these other jurisdictions really do look favorable, as people are looking at where, but the one thing I would want everybody to think about though is just because you're not doing it from the U.S., if you're a U.S. citizen or you're marketing to U.S. citizens, you're still within the reach of the SEC. It's not, that doesn't exempt you from their reach, and you would probably know better than I would.
Well, very true, and maybe we can talk just for a minute about what the SEC has actually done in the space. And here, SEC, I'm talking about the unfriendly part of the SEC, the enforcement division. So I'm sure you've all seen they did bring a case 6 weeks ago or so, against this Zaslavsky fellow who had an ICO supposedly backed by diamonds or by real estate. According to the government allegations, that's not true. So they sued him, went into federal court in Brooklyn, got an asset freeze, and then he has since been criminally charged. So that's sort of the first shot. Well, I guess the Dow report was the first shot by the SEC saying, we're here, we think we have jurisdiction. And in the Dow report, of course, they chose not to bring an action. Flash forward to the case they brought against the diamond real estate ICO. That was easy, low-hanging fruit. According to their allegations, it was a complete fraud. And so they went in before the ICO was complete, froze everything. That's an easy case. So I think we can expect to see more such easy cases. And we'll see easy cases of two different types. And the reason I think this, A, is because I've been talking to enforcement attorneys about some of the players in the space, but B, we've seen this before, whether it's with the .com IPOs or if you all were involved in the PIPES context, the private investments in public equities context a few years ago, where the SEC didn't like the model and they spent a lot of resources in going after people who were involved, investors and issuers. What we're going to see is a sort of bifurcated enforcement approach. We'll see them go after some big players involving big dollar amounts that will grab headlines on the one end, and that'll be in an effort to send a signal, act as a deterrent, and those cases are most likely to involve fraud allegations, somewhat like what we saw alleged against the diamond and real estate ICO. So we'll see those, there's no doubt. But for the people in this room who no doubt have no intention of falling in that area, we may also see what we saw in the PIPES context, which is the SEC develops more or less a conveyor belt for enforcement, where they see a model they don't like, and they investigate that model at the low end, even where small dollar amounts are raised. And for example, maybe not even involving fraud, but we see an ICO, it looks to us like it's a security, there's no registration statement, we don't see an exemption. Let's bring a whole series of these. I mean, during the PIPES craze, and maybe they're making a comeback, maybe they're not, but during the PIPES craze, the SEC did that. They sent out subpoenas on these, by the dozens, and brought a whole host of cases, not against big names, not involving huge dollar amounts, but involving smaller dollar amounts and people you've never heard of. So you'll see, and in fact, the SEC has already created an internal enforcement group who's looking at these, both in New York and in DC, and probably elsewhere. They're getting educated, they're figuring out what these are, and eventually they'll figure out a way to more or less automate the process, or at least it won't be automatic, but it'll be like a conveyor belt of subpoena, 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 followed by some percentage of those resulting in an enforcement action.
So being that most of us here that we're interested in this space, and you made the analogy with internet and pipes, the .com, we're sort of at the same sort of juncture here, right? Where we're seeing this space, everybody's getting involved, and most people don't want to be subpoenaed by the SEC, don't want to have that. So from your perspective, if I were going to launch an ICO, if I were going to do this, what would your recommendation of how should I structure it? How should I, be compliant? As compliant as I can, while trying to, avoid some of the various pitfalls.
So first, before I answer that, let me say I recognize that the regulatory approach here, it's not something I agree with. I'm trying to explain what I think we should all anticipate. I think the ICO space is exciting, innovative, and should be allowed to flourish. And it's a few of the bad apples who are going to cause what I think will be a regulatory overreach and backlash. So keeping in mind that you don't want to get hit by the backlash, kind of going back to what I said in the opening comments was, don't spend all your time trying to figure out how you can avoid being characterized as a security. Unless you're one of the outliers who's a true utility token, it's too nuanced. I mean, I will, when you get sued by the SEC, I will defend you and argue that it is not a security until a federal district court judge tells me otherwise. But as far as getting entangled in an investigation, the SEC is not going to have a real nuanced view on whether it's a security or not. So first step is assume you're a security. And I know from talking to people in the space, given the level of enthusiasm around this, that there are going to be some people who approach the regulatory risk the way that Uber approaches regulatory risk, which is, let's just go raise some money. We'll figure out how to deal with the regulators later. And that is one approach. And you play the odds and maybe you don't get a subpoena. A different approach would be to try to comply with the federal securities laws as they exist, which I realize is sort of a big bummer. But so there are ways to issue securities that have been around a long time. And if you're ICO, if you just assume it's a security, there are low-cost options. The Jobs Act actually created some good models that we are currently using with clients right now to structure their ICOs within existing either exemptions or low-cost registrations. So I would say that's a good starting point, is if you treat it like a security, make your offering comply with current registration or exemption requirements, that's a good starting point.
And I think along with that, I mean, neither you nor I are accountants, but you can't just think about the regulatory perspective from whoever regulates securities within. You know, we were also talking about, you know, whether it's the IRS or how a token or a product is viewed in the specific jurisdiction that you're marketing to. So from a tax perspective, that's a huge thing. I know a lot of people will say, oh, but if I can raise $100 million, then I'm willing to pay the taxes on that. But then, you know, it's really important to think about all the various pieces of regulation, from the securities aspect, from the accounting aspect. And then, you know, even now, as you get into more things with, you know, hacking and cybersecurity, is if you have these tokens, are they safe? Can they be stolen or something else from that perspective?
I wish we had better news to share on the regulatory front, but you're absolutely right that you see people structuring things so that they're a utility token, not to try and avoid being characterized as a security, try to avoid the jurisdiction of the SEC, so they go to construct it like a utility token, which they are selling for money. And the IRS is going to have a view on what you need to do with that money and how much you need to pay in taxes. Now you're selling a good and you're getting money for it. Similarly, if it's truly a currency and not a utility token or a security, now you have currency issues, which I know with your past in the payments area, I'm sure FinCEN probably would have something to say about money laundering issues and that sort of thing if it's a currency. So unfortunately, it doesn't really matter how you structure it. You're going to fall into someone's regulatory purview or another.
I know you don't have an answer to this, but China has banned ICOs. They're looking for how can we control this, how can we take care of this, and that's actually a huge market for ICOs, right? It's the Chinese market and the Chinese investors or donors. From your perspective, do you see them sticking to that? Do you see them coming out with some sort of statement or guidance that's different than what they do today, or?
Hard to say anything about how China is going to proceed, but I think if the government of China, if the Communist Party can figure out a way that it's good for China to allow it to flourish, as I understand it, one of the big issues there with regard to their government declaring the ICOs verboten was capital controls. I mean, they have a huge issue on people, Chinese citizens wanting to move their money overseas out of the country, and so shutting down ICOs is not going to solve that problem. So maybe when the government of China realizes there's some money to be made and it's not solving the capital controls problem, maybe they'll come back sort of with a more friendly face. You raised the phrase regulatory arbitrage. I mean, there will be jurisdictions out there who will be more friendly to this, and maybe it's Singapore, maybe it's somewhere else. And I think that potential that there will be more friendly regulatory jurisdictions will help push our regulators to not be too heavy-handed in this space. The SEC chairman, Jay Clayton, one of his big points when he was being confirmed was that there are fewer and fewer IPOs in the US because of the regulatory burden here. And I think that perspective that, hey, we as a market are losing market share to other more friendly jurisdictions, I think that mindset was one of the reasons why the SEC's Dow report was restrained. It didn't say all ICOs are securities, and it didn't bring an enforcement action. So I think that the current people running the SEC are aware of the risk to our markets of regulatory arbitrage and will therefore be at least hopefully thoughtful and not heavy-handed in the actions that they bring.
Yeah, so that's a more moderate approach rather than the Chinese approach of just cutting it off. But yeah, I do agree with you that I would view with regulatory arbitrage, I would view the Chinese trying to come to some consensus so that they can say, okay, how is this going to work for us, and even getting input from various companies and agencies so that they can have that agreement before they they roll out whatever the next, their next step is from that perspective.
You interact with a lot of regulators around the world. Are there jurisdictions that you see? I mean, you mentioned Singapore. Have you seen other jurisdictions, not necessarily related to ICOs, but that maybe bring a more friendly approach to financial and transactions matters, maybe more friendly than the United States?
Yeah, I mean, I think it depends on what type of, what you're trying to leverage, right? So from the perspective of like Hong Kong, from a taxation perspective, that's one that's much friendlier as long as you're not, selling to the citizens there, as if it's everybody that's external. And then I've also seen just in the UK with Brexit, even though the FCA has a strong financial interest in overseeing and regulating, but that's an area where there can be the opportunity for them to sort of welcome that in, to say, hey, as we're leaving the EU, we are open to some of these other new, fintech ideas and things, and they've sort of created a community there that's been helpful from that perspective as well.
I know we want to keep on schedule. Are there any questions from the audience so we can answer? Yes. Given the difficulty in hearing, I'm just going to give you my mic.
Hi. So I'm Maya Rosen. I wanted to know regarding payment and tokens for whether you're an advisor, regarding payments and tokens, whether you're an advisor, employee, or whatever you may be for that particular company. So they're going to be giving you, donating, whatever, tokens. How are you claiming that in terms of taxes?
So the question is, if you're working at a company that's doing an ICO and you're given ICOs as part of your compensation? Salary, okay. Compensation. How are you dealing with that? Well, I can probably guess at how the IRS would view it. They're going to view it as, I can guess how the IRS would view it. They're going to view it as income, taxable income. That presents, even if you're leaving it in as a token for a long time, I'm sure the SEC will view that as compensation. That creates all sorts of questions, though. How much is it worth? How much income is that, given that there's no market and no value? We see similar issues or questions raised by investors in tokens. So there are lots of funds, hedge funds and other funds, who are buying up tokens in ICOs, and one of the issues they have is reporting the value of those tokens to their investors. So if you're an investor in a hedge fund and your hedge fund owns tokens, you want to know, well, what am I invested in? And I don't have an answer to that. It presents an interesting question, particularly if you're a hedge fund and you're trying to calculate your compensation, which is based on the value of the assets the hedge fund owns. You need to come up with a value. So that's somewhat similar to the question that an employee will be facing in terms of how to declare that to the IRS. Still up in the air. It's, I think, too early to tell. I haven't seen any pronouncements from the SEC on that. I mean, from the IRS on that point. But give them another 5 years, and we'll know.
I was going to say I would just agree with that. That it would be viewed as income, and then the other thing would be is depending on what jurisdiction you're in. If you're a U.S. citizen, once again, that would be taxable, wherever in the world, because it would be income to a U.S. citizen. Yes, similar. Yeah, if you're dual citizenship, it would be. They would consider it income. That's my view, but obviously
you should talk to your tax accountant for sure. Any other questions? Yep.
Thanks. I guess think about this as the cheapskate question. Okay, so assume you have a utility token, or your lawyer has signed off on that interpretation. What would be the ways of trying to structuring your offering to minimize both the costs and the expense of securities regulation compliance and also potential tax hit on any proceeds you get from the sale of your token? So I'm thinking about, would you have a pre-sale? How much functionality does the token need to have at the time of sale? Are there certain jurisdictions you would definitely avoid versus not, if you're really trying to drive down your costs?
I just before you start, I was going to say, one of the things you mentioned, the pre-sale. That's very interesting, because a pre-sale is still a sale. So if the pre-sale is it's still considered a security. It's still taxable. It's not really any different than the sale. So I would say that differentiation isn't necessarily a factor. But
Well, one thing you had about 5 questions, which I appreciate, by the way, but I'm not sure I'm going to be able to answer all of them. So we know each other, so you can ask me those later. But what I would say, you started out your question by saying, okay, it's a utility token. How should your lawyer signed off on that? And then you started talking about securities registration. So one thing I would say is get analysis of which bucket you fit in. Am I a security or am I something else? The worst of all possible worlds is to make the mistake that you're wrong and you get hit on both sides. In other words, you fail to comply with the federal securities regulations, and the IRS views it as taxable income when you sell the tokens. So I would say get some good analysis. If you're a wobbler where you're not sure if you're selling a token that's results in taxable income, or whether you're raising money and investors are buying tokens for that purpose, get some analysis done on that point. I'm gonna go out on a limb here and say that I think most of the models I've seen fall into the securities bucket, not the taxable income bucket. But you're going to need to talk to a lawyer to figure that out.
you got this.
Anyway, thank you. So please give these gentlemen a round of applause.